All right, guys. We got a lot to talk about. Um, can everyone hear me? Can everyone hear me? Okay, see some tickers here. High lag. All right. I had a list of things of where I wanted to start, and I'm going to kind of split this up into two categories. We'll first very briefly talk about Friday's Jerome Powell at the Jackson Hole, which is going to set the tone and the direction of the market going forward, at least for the next couple of weeks. It's too difficult to uh, to to predict any further out than a couple of weeks. Right now, we can only fairly accurately say where the market's going up until the next CPI data release and the next FOMC meeting, which is set in September, and I've got it marked right in here. Right here. Next FOMC is September 9th. I'm going to double check that real quick. Because that's going to be the next key date, September 21st. No, sorry, wrong one. Federal Reserve Board. Yeah, September 20th and the 21st, 2-day meeting conference. So on September 20th, mark your calendars. And in the sense of the market, it's a long ways off. Let me go ahead and edit this real quick. Let's see. All right. So very briefly, I'm going to I took some notes on what Jerome Powell kind of went over in his speech. And the previous year, he, in the same location, Jackson Hole, which is, according to Alan Greenspan, they put the Jackson Hole meeting on their calendars and once a year, and then they plan everything else around it. That's how significant this day and this meeting is. And really, all it is a bunch of um, foreign central banks, politicians, uh, your Federal Reserve folks, and then some very specific select journalists will come together once a year and have this meeting to discuss the world, monetary systems, and things and so forth. So, could they be planning the world's demise? Very likely. But last year, Jerome Powell said that inflation would be transitory. At least that was their position. I think he firmly believed that, but we also have to keep in mind that Janet Yellen has been his mentor for a very long time. And so he had her in his ear who also said this, and it would not surprise me one bit if that information came directly from her. Now, obviously, since then, that is not the case, and I think anyone on Wall Street, I've you watch the news and everyone's been screaming that that's absurd, that inflation is transitory. It's definitely here to stay and it's going to get worse. So for the Federal Reserve, especially Jerome Powell, the people that pretty much make your monetary policy and control such major aspects of our economy and the world, for them to not see that is either incompetence or it's deliberate. And I don't know which one that is. It's not for me to decide, but it was a pretty big fuck up. So fast forward a year later, here we are, and you have to keep in mind that for the last year, the first 6 months since that last Jackson Hole, going into the early spring, the earnings have been at the forefront of anticipating, and the Federal Reserve and Wall Street, of course, but the Federal Reserve, they've been kind of sitting back and waiting to see, okay, how bad is the inflation going to get? How bad is it going to affect companies? But even more so, how is it going to affect consumer habits? Because for those of you that don't know, our economy and the world, but definitely the United States economy, the machine that it does not function. It does not benefit our society and the way that the system is designed unless we spend money. That's why we are called consumers. And I highly encourage anyone to look up the legal definition of a consumer. And it's just a very interesting wording on how they describe that. So they've been watching consumers and the trends to see, okay, if the job market is still good, and they've been talking about that and kind of putting that at the forefront of, hey, look how good the economy's doing. But the Federal Reserve knows and Wall Street knows that if people have jobs and the unemployment is not going up, consumers are still going to be spending. If consumers are spending in a supply chain that is limited, then consumers are going to be paying more for goods that are scarce, because supply and demand, if the goods or supply is low, then the price goes up. And if the price goes up, people are willing to pay that price. The price will continue to go up. So standard models for supply and demand, and then the pricing that comes out of that. So because that is continuing to go on, because consumers are still spending, prices are going higher, inflation is believed to be peaking. um, that's presenting a problem for the Federal Reserve because it forces them to raise interest rates. The problem with the Federal Reserve raising interest rates is that it also raises the interest rate at which the United States of America, Incorporated, because it's a corporation, the USA borrows money from the Federal Reserve at that same interest rate. So while the Federal Reserve is wants to raise interest rates to force people to slow down their spending, to slow down buying houses, to slow down buying cars, to slow down buying everything, credit cards, you name it, across the board. They want to raise interest rates. They can't because it will have a detrimental effect on our ability to pay to service our debt on the money that not only that we already owe, but any kind of future borrowing. And one of someone said it that the basically the Federal Reserve has checkmated itself because now they're backed into a corner where they're forced to they can't raise the interest rate. They really want to, but they really can't because the amount of money, the billions that the US government is required to pay to service our debt is astronomical. It's due every month. And in order to pay that off, the Congress has to print more money, or they have to pass bills that force us to demand more money. We're literally in a debt snowball rolling downhill, and it's getting faster and faster. And so um, I forget the guy's name. There's a stock that Papatia. He's a billionaire, whatever. Has got a lot of business going on, but he has a great video that I watched here just the other day, and he talks about this. And that's that in itself is when you get a lot of people that are talking about doom and gloom about our economy crashing. That is what they're seeing because you can't have spending in government, you can't have high inflation, you can't have high employment, low unemployment, and and the monetary system continue to be able to work the way it was intended to do because of the amount of fucking debt that our country has acquired over the last couple years. And there doesn't seem to be any kind of slowdown by our representatives the spending habits. And that's kind of the fucked up part, because there's a train coming and we're on the tracks, and then no one's really saying anything. And I say no one as in the people. I'm sure there are plenty of people who are bitching and complaining and yelling about it. And but we need to understand it more and speak up more. And when I say speak up, I mean, calling a representative, sending a letter, sending an email to anyone to express concern about the amount of fucking spending going on. So let's move on though. So Jerome Powell, his original speech last year was about 25 minutes. This year it was for 9 minutes. And I don't know if he changed his speech in that, if he was slotted for 30 minutes and he changed his speech at the last minute. I remember hearing on the news somewhere that someone had brought up that maybe he changed his speech at the last minute, which is concerning in itself. But here's what he said, and these are the words that came out of his mouth. The Federal Open Market Committee, FOMC's overarching focus right now is to bring inflation back down to our 2% goal. Okay, right now it's at about, I think it's 8%. So what they're in negative, they have a negative interest rate right now. He said restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. That forcefully word is one of the key words that shocked the shit out of people and shocked the markets. A lot of I don't know why, but a lot of people were thinking that he was going to come out and kind of play it dovish, and then the markets could climb higher and everything would be okay. But what everyone needs to understand is the Federal Reserve is supposed to be independent. It's supposed to be free of any kind of influence. But I guarantee you, Wall Street, if there's only 100 or so people at this at the Jackson Hole, I guarantee you at least one of the people there was a representative from BlackRock, a representative from JP Morgan, some of your, massive multi-billion dollar hedge funds from Wall Street. I guarantee you they had some of their people there because they wanted to talk to Powell, see what he's doing. What are you thinking? And don't fuck this up for Wall Street, because again, I've said it before and I'll say it again. Wall Street has the money and funds for firefighters, for policemen, for the unions. They control the funds and all the money that workers are paying into their retirement funds, their pension funds, okay, for teachers, for everybody. So when their 401ks start to tank, just like it did back when this whole thing started, back, what was it, in April, when we reached our peak up here in right at the end of the year, um, right in January, right here in March is where the downward spiral started, and it was kind of gradual. Here you had a pretty big drop, but once it got once that CPI data came out, 8.1%. That startled people, and when more information, this is where the bad news turned into good news. So the CPI, the unemployment numbers started to go up a little bit, and the market saw that as good. So if people are losing their jobs, then we're at the apex and we're starting to see the turnaround. Well, then more employment data, consumer sentiment, all of these things started to come out, and they realized, like, oh shit, well, it wasn't as bad as we thought it was. And what was it right here? I cannot remember what it was. June 8th. That might have been the next CPI. So if that was, yeah, that's probably what it was. I guess I didn't have it on here. So the next CPI data that came out was at 9%. So inflation was still going up, and it was still a month behind. This data that gets reported is still a month behind. So we went from 1, 2, 3, 4 days. We dropped from 400 down to 372. So that is a massive drop to go from almost 416, 415 all the way down to the 370s. Um, and so fast forward now to Jackson Hole, and you have Jerome Powell coming out in less than 9 minutes and saying that the tools that they're going to use will forcefully bring demand and supply into better balance. He went on to say as well that while there are higher interest rates and slower growth, a softer labor market conditions will bring down inflation. So as people start getting laid off, that will bring down inflation. They will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. It's very important that you hear those words because shit's about to get real. And there was nothing positive in what Jerome Powell said in these 9 minutes. He knows that the unfortunate cost of reducing inflation is going to bring some pain to households and businesses. And that's important to keep in mind because they're definitely going to raise interest rates and they're going to continue to raise interest rates. And one of the reasons why the market sold off as steady, it didn't take a massive shit, but it was a steady decline with no pops whatsoever. Let's take a look at this in the charts real quick. Let's go to the 15 minutes. There is no bounce whatsoever in this entire day. Once he said what he had to say, and markets it didn't take long to realize, oh shit, Jerome Powell they're not going to pivot. That's what the markets were looking for in his speech. In past speeches and things that Powell said in the past, he has indicated that at the right time in the future, they will stop increasing interest rates and maybe even lower interest rates, and that had a very dovish tone to it. And he did not mention that at all in this speech, and that's where the market went. So layoffs and unemployment is coming. I would not be surprised if you start to see layoffs and unemployment pick up at a massive rate in the coming weeks because Wall Street, you got to think about companies have balance sheets. Laying off people actually helps the company because they know that the economy is going to pull back. It already started has contracting, and companies have started laying off people, but we haven't really seen massive layoffs. We have yet to really see that. And so the valuations of companies are still very reasonable, but the contraction of the economy is about to get hit pretty hard because you're going to start to see more and more layoffs, which will dramatically uh, decrease inflation. So the need for Powell to increase interest rates, um, it will hopefully he won't need to do it as much because later in his speech he brings up the fact that Um, the current inflation in the United States is a product of strong demand and constrained supply. People want to buy things, but there's not enough to be there. And the public expectation about future inflation can play an important role in setting the path of inflation over time. Longer term inflation expectations appear to remain well anchored, and that's broadly true of surveys and household businesses. What he's telling you is, let me read on here a second here. He said the successful Volcker disinflation in the early 1980s followed multiple failed attempts to lower inflation over the previous 15 years. And this is the important part. A lengthy period of very restrictive monetary policy was ultimately needed to stem the high inflation and start the process of getting inflation down to the low and stable levels that were the norm until the spring of last year. And our aim is to avoid that outcome by acting with resolve now. We are taking forceful and rapid steps to moderate demand. I don't know exactly what that means, forceful and rapid steps, But the one thing that everyone's forgotten about is the balance sheet by the Fed. The Fed has an enormous, almost a $10 trillion balance sheet that they have to unwind. And these are assets, these are mortgage backed securities. So, amongst many other things, but a good chunk of them are these mortgage backed securities. Um, and what they did is they tried to prevent a 2008 where the mortgage market tanked because of all of these bad loans that people were in. So the Federal Reserve has bought up a lot of these mortgages, and they have to start selling those off. So the last market to go in before a recession is the real estate market. So once the Fed starts selling off these mortgage-backed securities, the real estate market is going to start tanking, and that will be the final blow right before this recession comes. So we don't. The Federal Reserve was supposed to start selling off 110. I think it was $100 billion a month, I believe. But they've tried to spread it out over 10 years. The recession and sorry, mic went off. And I'm gonna keep looking at the screen here to make sure if y'all can't hear me that I see that here. Okay. It'll put it in daily chatter if I see it pop up. So so this balance sheet is going to be the what I'm keeping my eyes on. It's a huge concern. I think that that's going to start the kind of snowballing effect because there's a war going on behind the scenes because the Biden administration and politicians don't want the market to tank before the elections. The Federal Reserve is supposed to be independent, so they shouldn't be influenced by anyone, but they need to start unrolling their balance sheet and they've got to get inflation under control. So, how do they stop people from spending? The only way to do that is to either raise interest rates or, oh shit, what was the other thing? Or to unwind the balance sheet, which doesn't have a major effect. There was one other thing, and I can't remember it comes to mind, but raising interest rates is one of the tools that they have. Now, the Federal Reserve is anticipated to raise interest rates. I believe it's another like 2.5 basis points. So they basically got three more um, rate increases before the end of the year because they had a specific rate that they wanted to be at, which was I think it was at 4%, 2% to be neutral. But um, I don't know if they're going to change that or stick to that because at the next FOMC meeting here in September, I wouldn't be surprised if they increase by a full point. That will definitely tank the markets, at least initially. If they do, I don't see them doing 50. That would just be stupid. And 75 is very likely at least what they'll do. But the tone of Jerome Powell, I don't know if he was pissed, irritated, or what. But uh, because inflation is not coming down like it's supposed to, like they said it would over a year ago, they're going to have to do something drastic. Not Paul Volcker drastic, where Volcker increased interest rates a lot in a short period of time. And the important part that you need to know is that the when Volcker did that, it scared the shit out of the markets, tanked the markets for a long time, and companies immediately laid a lot of people off. And what that did was it basically reprogrammed people in a short period of time to not only not spend money, but they reduced their groceries, they reduced all their bills because they had no jobs. Interest rates were sky high, their credit cards were sky high. Back then, the average loan interest rate was anywhere from 12 to 15%. Some people had 18% mortgage interest, which is unbelievable in today's world. But some people were paying that much on their mortgage note back then. And so the people that were under the variable interest rate loans, um, a lot of people lost a lot of shit. It was pretty bad. So Powell knows that he can't do that. In addition to the United States having to pay off those high interest rates, pay off the debt, the interest on the debt at those interest rates. But he knows that that he can't fuck with the minds of consumers too much, because people will permanently stop spending, which will cause us much longer, significantly longer, to come out of this recession. Because the Federal Reserve has an idea of about 2 to 3 years that's going to take to go into a recession and come out of it. How deep of a recession we go into is unknown, and that's what Powell was talking about as far as a soft landing. He's trying to he hasn't said it and he can't say it, but he's trying to get us into a recession as gently as possible so that we can come out of it. I don't see that happening, because we've spent so much money in the last few years that just servicing the debt alone is going to drive us even more so into a hard recession. And you're starting to hear that from CEOs and from a lot of more people on Wall Street, that it's not looking like we're going to come out of this thing easy. In fact, on the opposite side, the people are saying that it's going to be the worst fucking recession we've seen since the Great Depression, basically. And that's a possibility, but we can only see so far into the future. And that's where, as a traders, we can only look a couple of weeks ahead, a week ahead, based on price action, based on the news. Anyone who tries to predict what's going to happen a month or two from now, like I was trying to do a few months ago, I will be the first to admit it's impossible to do now, because you don't know what data is going to come back that's going to spook, and then how the markets are going to handle it, how Wall Street's going to handle it. So the hedge funds and the market makers, they move the markets, they control the markets. We are but just a very small sliver of the piece of the pie, and we control almost nothing. And so that's why when I hear about people putting all of their money into AMC or Bed Bath and Beyond, or putting a huge chunk of money into it and then staying in that trade, that's how you get stuck, and that's how you lose 40, 50, 75% of your account, because you don't get out when you should. And we're going to take a look at that here in just a little bit. I just want to real quick, we're going to look at the charts here in just a second, but I'm going through my notes here to see and make sure that there wasn't. Monday, we're likely going to see a continued sell-off. I don't know what's going to happen after Monday. I'm only looking forward to Monday, and I think that's about it. Yeah, the one thing that always perturbs me in these speeches is that the Federal Reserve never mentions the fact that printing a shit ton of money is the main driver of inflation, period. Um, over the years, as the government, as Congress has authorized the Federal Reserve to print more money, inflation goes up, and then it comes down a little bit, but then we all get used to it. And they count on that. It shouldn't be that way, but they count on that. And that's the shit that needs to change. All right, let's take a look at some charts here. I'm going to start with the SPY. Let's go back to the daily chart real quick, because I want to see, now that we're here, that's like being here or here or here. We saw from 468 in less than a week, 50, 60 points. That was 1, 2, 3, 4, 5, 6, 7. Gosh, 7 fucking trading days, guys. And the SPY lost 50, almost 60 points. That's just crazy. I mean, think about it. If you were in an option trade and you bought puts, okay, just to give you an idea here. if you bought puts in the money, 277, and that dropped 60 points. Oh, wrong way. 231. That's easily $5,000 in 1 week on one trade. So let's, what I've got here, the purple is a Fibonacci retracement. And I've got one Fibonacci drawn at the high of SPY, 476.44. And what I did is I pulled it down until it started to reach certain key levels, prior strong support, strong resistance. The way I started drawing these out is I started on the monthly and I took a look at the chart. Okay, what does the monthly look like? I know this looks very cluttered. Let me okay. So when I started drawing out the SPY, I'm looking at key levels of support and resistance. We got clearly one here, and another one in here. But right in here, right about in here is another key level in the 14. We already broke through that already. The 9 EMA it's not useful here. It's the 200. Let's pull back. I drew a key level here and I think another couple down here, and I pulled back on the weekly. Let's take a look at the weekly. So I saw right in here is another key level of support and resistance. We broke through that. And then where's another one? I think right in here. I think I had another one drawn right in here. We're coming up to, I've got a 21, a 100 day, and a 200. We want to use a moving average. Here we go. So we broke through the 100 here. And now let's switch to the daily. Here we are. So on the daily, we're at the 100 moving average. I don't see this holding on Monday. The other thing that Powell seemed, this is my opinion, but he seemed basically fed up. Interest rates aren't going down. He's tried the soft landing talk. He's tried to be dovish, and I think that just based on the words that he used, I don't think they have to do anything else or say anything else. I think behind the scenes they're going to start selling off the balance sheet over the next, and it may have started Friday for all I know, but it's gonna. What I don't know is how are the market makers going to prevent the markets from crashing, because I feel like the algorithms especially are programmed to ease the market down to prevent a flash crash. Because right now, the mentality of Wall Street and the market makers are uh, their rules are they have to participate in the market. And because a lot of them are still holding with these pension funds and the 401k plans, they're holding stocks like Apple and your Microsoft and all your blue chip stocks. They've bought into those stocks. And so they're not going to sell out of those positions. Instead, they're going to hedge those positions with put options. And months ago, they've said that they were starting to do that. They likely were doing it a hell of a lot sooner than that, and they're likely going in a lot heavier in this lead up to this, because you have to keep in mind from a technical analysis standpoint. We hit the upper trend line right here. So Wall Street traders, everyone knew that from a technical analysis standpoint, at the 200 moving average and the top of this trend line, you take profits, you sell, you get out. That's one of the reasons why we started to come down, because we rode it up, We reached the top of that line, and Jackson Hole was right around the corner. So everyone was getting out of their positions in anticipation for waiting to hear what Powell was going to say. And traders took um, put positions here. Unfortunately, I've been working so much this week, I have not been able to be on, so I apologize to everyone that I haven't been able to help out as much as I would like to. So, but I took short put options on Thursday, and in anticipation for at least people selling off into, and I held on to it through Jerome's speech. And I'm probably, depending on where we bounce on Monday, is what I'm gonna watch for, because I feel like if we take a look at the 1 hour here, we're coming up to a couple of points where I've got a Fibonacci retracement back here, and we're approaching the 400. So what I'm looking for on Monday is to see how if we bounce off of 400. It's a psychological key level. And the other thing that I want to look at is a volume profile. The other thing that is these gaps. Um, we bounced and hit the top of this trend line. We I believe we filled the gap. I think we filled this gap here. Yeah, we filled that gap. So this gap is done. We did not fill this gap. Now, we could bounce here and come up. I actually don't see that happening. Just don't see that happening. So the question is, where are we going to bounce? Because we did not bounce at all on Friday, we're definitely going lower on Monday. Usually a Friday sell-off like this, especially with this kind of news, it will continue on Monday. We went from 420, almost 421, all the way down to 403. That's a pretty big fucking drop. That's a big drop. Nope, I don't want that. All right, I'll come back to that later. All right, let's take a look at some other stocks here. A lot happened this last week. We've got active. Where Mullen. Mullen's getting interesting, guys. I know we've been on a downtrend here. Real quick, let's go over Mullen real fast. What I'm looking for is a reversal. It's going to take some news, and we might see more investors buying in here. In anticipation for the September, or maybe it was October, where they release more news about their 5 EV chat. What is it? There was a version of some of their vehicles that was going to come out. It's not great news. I don't think Mullen should be trading this low, but when you dilute, your shares. Actually, I take that back. They did a reverse split. No, I may have that wrong. But either way, they've got 411 float out there, and that's another thing for if y'all forgotten, or for new people. The first thing I take a look at when I pull up a ticker is I look at the float. The float is going to tell me how fast is this thing going to move if a shit ton of buyers come in. The TBLT is a perfect example of that. I'm waiting for TBLT to run again. It's in the top, I believe the top 3, definitely the top 5 most shorted stocks right now. And we're coming back to the $3 level, so I'm looking for a possible bounce off of 3. If you take a look here, if I draw a line, there's clearly previous resistance here, and Yeah, it's been a while since we've been this low. So I'm looking for a bounce off of 3 somewhere in TBLT. Let's go over some tickers here. VLCN, Volcon. I traded this one last week. Even though they did an offering, I want to say something for the record. I took a position on this. The news that they had that came out. Where did I buy into this thing? It dropped down. It came down. Gosh, I cannot remember here. I think it was close to a dollar. I thought, yeah, close to a dollar here. And I can't remember the other guy, but we were watching that trade, and like the day that I bought into it, the news was released about an offering, and I stayed in it. And the reason that I stayed in it, it was $1.90. I think that's what it was, not a dollar. So it broke right around $2 is where I took an entry in here. And the only reason that I stayed in this trade, where I would normally get out, especially on offering news, was that the offering amount was much higher. It was like 235 or 230, 245. It was higher than where the stock was trading. On top of that, the float is 10 million. And the number one reason why I stayed in was because of on the level 2 data, there was a 200,000 share buyer that was sitting there. And I watched it a good part of the day, and the next day the buyer came back again and it sat on about $1.85 and it never moved. And the price action never dropped below that. And shortly after that it started to climb higher. Now I got out here in the 235s, I believe, maybe 240, and the next day this thing continued higher. And so in those situations, if the offering was not higher than where my entry was, and there was not a 200,000 share buyer that was just sitting on the bid, I would have gotten out. But to me, those were huge plus signs, and it's very, in my opinion, from what I've seen, it's rare that that happens where you have those two things where the price action and the entry on the trade was lower, much lower than where the offering was, and there's a massive buyer. And I'm not sure if there still is one, but if you see a 200,000 or 150,000 share buyer on the bid, this is why level 2 is so important. Absolutely must have. Uh, if that guy's still there, then this thing could go much higher because the news on this company, it's not, they don't have a contract with Amazon or with Apple or anything, but I believe that they are cash positive, or they certainly will be, I think, after the offering. But the potential for the price to go up a little bit more, at least to the threes. You know, you have to take a look at the big picture of the markets overall. Here's where Jerome Powell, and you need to compare every single stock to what I'm about to show you. Here's where Jerome Powell and his speech came in, and the sell-off happened. Now, the fact that this recovered is great. If you're in this stock, there's plenty of buyers that came in and bought the dip. Other stocks, if somebody said something, I couldn't hear what it was, but if you're in Microsoft, yeah, it bounced a little bit, but it didn't continue back up like Volcon did. And so now that the markets, your blue chips, and pretty much across the board, you're going to start to see stocks continue lower. You're now going to see a shift from your blue chip stocks into penny stocks. Hedge funds trade penny stocks. They have a very specific criteria that they look for, and they have a very specific time of the day in which they enter and will put millions of dollars into these penny stocks for a day trade, maybe even an overnight or a swing trade. But you're going to start to see uh, the attention on Wall Street turn from stocks that are going down to stocks that are going up. And that's going to be a lot of your low float penny stocks. You're also going to see retail traders who normally trade penny stocks anyways, but you're going to see a more volume move into a lot of these penny stocks. And when I see penny stocks, I don't mean the barcode penny stocks. Um, that you might normally see here. Let's see, this is on volume. Let's do top gainers after hours. This is barcoding right here. I'm not talking about these stocks. I'm talking about Cal had. I thought Cal had some good news, but I guess not. I don't really recognize some of these here, but Minerva, perfect example. I missed this trade. Once this broke, and here's what you're looking for. The previous day high was right here. Once that broke, and not just that, I mean, it broke here and came back down, but it bounced off of it bounced off everything, 200, 21, no, 50, and the 100. So once it saw support and bounced off there, and here's the key thing, previous day high, right here, right in here, once it pushed through that level, it just went straight up. Now, I want y'all to pay attention to something because this is important, and I'm just guessing here. This is on a 5-minute. We saw a hard push from 8 to 9, easy dollar push. Why is that? Why did it push so easily? Boom, right here. This is the volume profile. All this right here, the shaded area, this is, you could almost call it supply, trap supply. When a stock price is moving up, once it has to kind of chop and churn and grind through a lot of stuck sellers. Bag holders may have been holding on to this. And so they're just trying to get out. So when the price goes up and it chews through a lot of supply here, a lot of volume, the moment it breaks free, boom, this thing shoots up. And it continued higher. And look what's right here. So what you're seeing here is I'm seeing this, and so traders all across the world, anyone who's in the market, they're seeing this too. Short sellers, if they're short in this stock right now, shorts are kind of fucked because now the price is, what do we close at? Bounced up to 12, came back down. All right, so we're right at about 1085. So at 1085, short sellers know if the price action breaks past 1098, if it breaks 11, you're going to see a massive short squeeze. It's coming, and I'll if I've got time away, I'll be looking to trade this. It's going to happen in the morning. Nerve is going to break past. I say it is. This is not financial advice. I'm not a financial advisor. I'm not licensed by the SEC or any kind of financial institution. So please don't take this as gospel. But there is a very high probability that once 1093, really, I would just say 11. Once 11 breaks, this fucking thing is going to go. It can go a lot higher. It can go all the way up to 13 easily. You might see push up to 16. Let's go and draw some lines here. Price level. Definitely previous resistance here. As it comes up, it's called resistance. If it's coming down, this is called support. So once it crosses these key levels here, definitely, I mean, you're going to see it somewhere in here. How much is that? 1612 up to 1680. So we'll just call this right in there-ish. So what is the all-time high here? Oh shit. What's the news on this thing? On the 26th, there were 10 stocks that are trending. So here's something interesting. I don't know if y'all have realized, but and there, Thinkorswim, the news aggregate is outstanding. It's the best free news aggregate out there. Breaking news drops on Thinkorswim almost as fast as any other place. Like the Bloomberg terminal. I believe that you have to pay, it's like 25,000 a year, some stupid number, in order to get access to. And Bloomberg and Benzinga News, they have like just breaking off the wire news. But you're starting to see, instead. Okay, let's make sure everybody can hear me, because my headset sets a timeout, I think, every 30 minutes. All right. I used to see news headlines, Benzinga and other news places reporting about what the latest meme stocks were, and so now I'm starting to see that there is the Discord is providing statistics on what the most talked about the trending stocks are on Discord. So we used to see Wall Street Bets be in the place, and now we're starting to see it on Discord. So Nerve being the first one. I heard about Nerdy. OLB, we'll talk about OLB here in just a minute. BBBY, you will likely see another run on BBBY. I don't think it's going to be the push to 30 something dollars. You might see it at 20, but the market has ADD, and so once it sees something else that looks shiny, it'll divert its attention over here. And to be more specific, I mean, when Wall Street Bets, or retail traders, whatever you want to call it, whenever they hear other breaking news, you'll see a shift in price action kind of stall out. Traders will start selling out of one, and they'll move money over to another one. So something just to keep in mind. I think the biggest news on BBBY has left. There's probably a lot of traders that are still short in BBBY. We can take a look at that a little bit later. But Nerve is going to be the hot stock when the market opens at 3 or 4 a.m., depending on where you're at. And don't be surprised if you see it easily push past. Let's go back here and look at the 5-day, 5 minutes. Don't be surprised if once 11 breaks, once that breaks, it's off to the races. Definitely if 12 breaks. Okay, let's move on. VLCN, HCTI, HCTI. This is a barcode. Okay, Thinkorswim, I get it. Healthcare triangle. What's the news? What's the catalyst? That's one of the first things I'm looking for. Wywood Therapeutics. No. Files for resale up to 12 million shares of common stock. Earnings per share. So they made 11 sales of 11 million. That's up. That's definitely a big plus. 1 cent. They're negative 1 cent, which is probably better revenue. Let's see what the float is. We'll pull out real quick to a 1-year chart and see where the volume profile is. There's definitely not much resistance you're going to see until it reaches 63 cents, 63, and then it's got to churn its way up to $1. So I do not see this coming over $1. So don't get greedy if this thing pushes higher up to $1. It has a lot of trap supply here, a lot. So it's going to take a bigger catalyst than the news that has been out on that in order for it to push higher. Let's take a look at the float. Float is 12 million, so it definitely has the ability to move. But again, this is barcoding. There's not a lot of volume in here. Volume just hit today. And let's draw some support. Here's resistance. What is that? 58. Okay. It's going to get resistance here. Definitely here. Maybe in here. Yeah, that's it. There's going to be a much better plays than this. So if you're in this, guys, if you're in any stocks currently and you're trying to figure out how to get out of it, please post it in the stock chatter, daily chatter. Tell me the stocks and just say in it and what price are you in it. I don't care how many shares, just tell me what price you're in it, and I'm going to tell you, in my opinion, um, where it might be going, some levels you need to look for, how you might be able to average down, and a perfect example of that. Let's go ahead and look at AMC. Please tell me you sold out either here or here. We talked about this a few weeks ago. Excuse me, not in March. When did we talk about it? We talked about it. We actually talked about it here. Where's my? Oh, Webull needed to update because their charts were all fucked up. So we talked about AMC a few weeks ago on a Friday. Right. Shit, I think it was in here. No, it was earnings. It was earnings. So there was a lot of hype going into earnings, and earnings season is a great time to play the trend up into earnings. So if you got in here as it bounced off some previous support, and you bought some call options, you made a lot of money going into earnings. I don't. A lot of us have stopped trading through earnings unless you're going to play some type of lotto play, which is buying an option, a cheap option that's usually pretty far out of the money, just in case the stock skyrockets like snow. Jesus, my dumbass sold. I had a snow call on another account of mine, and I sold it the day before earnings for a very small profit. Very small profit. Right in here. I sold it here. And this thing went from 160, traded as high. I mean, that's a 40. That's just awesome. Anyways, let's go back to AMC real quick. AMC. So in the trade up to earnings, there was a clear trend line that was being formed here that the price action could not break through. And so when it got to this point and it tried 1, 2, 3 times to break through that trend line, that resistance, after 3 tries, traders sell out. The majority of your pro traders will just get out of the trade on a triple top. And that's what happened here. The price came action down. It found support and it tried again. Even though, in my opinion, earnings were not that great, the hype is what pushed this higher. Okay. And it went as high as 1840 here. And then one of the discussions that we had about AMC after earnings was that there was news that came out that Hollywood was transitioning away from streaming at home and looking more towards in the movie theaters. Now that COVID is for the most part, kind of found to be bullshit at this point. Yes, it killed a lot of people, but we also almost destroyed a nation and the entire world in that process. So, um, but now that Hollywood was announced to kind of be transitioning, that's, in my opinion, one of the catalysts that pushed this higher on an 8/5. I believe that was a Friday. 8/5, yeah, Friday. So um, the whole ApeCoin thing, in a nutshell, you have to be very careful now because ApeCoin, as you can see, obviously, the the ApeCoin news was only lasted long enough for people to I don't know if people realized or not, but my point was that uh, ApeCoin is not um, a gosh, what do you call it? It's not a derivative. I can't think of the name, but it it can be a detrimental addition to the stock. It can bring AMC stock down, um, but it has no value to it except for the belief that it has value, kind of like our monetary system. Um, but let's look at ApeCoin because now AMC is back down to $9 guys. It's lost 50% of its value in 2 weeks, 8/5, 3 weeks. Okay, so let's take a look at Ape. When Ape hit, had some hype. I forget where it opened it, but pushed up to 1050. So let's do some technical analysis here. We've got an all-time high of 1050. We've got an all-time low, 521. I'm going to draw here, definitely here, definitely here. Okay. You also have a trend. Come on. Okay. That's on the daily, which doesn't really give us a whole lot because it's kind of new, but now we can kind of tighten up some of our lines here. I'm just going to take this one that I already had. And it's kind of hard to say, with limited information, where should you start your lines, but uh, that's kind of what we're looking at now. We'll see how the price action goes, and maybe adjust some of these. Yeah, that's about right there. I'm going to bring this one down here. Let's back it off to the hour. Okay, so now I'm starting to see a clear pattern down. So now what I'll do is I love Webull is my favorite charting outside of TradingView, but this is one of my favorite tools because now we can do this. Now we have a clear trend. And so now and the other thing I love about it is it'll draw an upper trend line and lower trend line. It'll also draw a middle trend line as well. And you can see in certain areas that traders trade off of this middle one as well. So let's back this out to the 15, see where we're at. You can see here that there was a bounce off of previous support. Let's bring this down here. I know the chart looks kind of funky right now. Just give me a minute. And there's a lot of shit going on, that's for sure. So there's a clear. Basically trying to kind of redraw. I'm going to take this out for now. Clear support here. So now what is this going to do? If I had to predict the future or anticipate, not predict, anticipate, trading is a lot of mathematical mathematical possibilities, probabilities, if you will. We've got a clear double bounce off previous support here at the 630 level, and we're about to come into what appears to be a trend line. Now, I don't know. Let's tighten this up, make it look cleaner. There we go. Now, based on this chart, based on this trend line that I just drew, there's a very high probability that this will bounce off. At open, you'll basically find out. Jerome Powell's speech on Friday, we saw a sell-off, but it sold off into support, and buyers came in and bought that dip. It climbed up, and then it sold off. So right now, let's take a look. This was on a Friday. Let's go back. 1, 2, 3, 4. Okay, so this started trading on Monday. Friday, almost an hour before close, you see a sell-off. Okay, keep that in mind. You didn't see one here. Didn't really see one here, but you saw one here from 678. That's not a major sell-off, but it's something to keep in mind. Friday, big red candles, hour before close. So let's see what happens. If when the market opens, if this does not start to bounce and start to climb up at market open, or if this climbs higher, you'll see it touch this level and come back down. See, this hit previous support, or excuse me, resistance, and so that's probably another reason why it sold off. This seems to be trading on somewhat of a predictable pattern. Here's our trend line. So if this bounces here and traders buy this up, it continues to bounce. It could spike into this, but if you're trading this on a day trade and the price action gets here and level 2 shows to be a lot of sellers, that's where you sell. You get out of it. Let it come back down. If you're bound by the PDT rule and you don't have a lot of day trades, then you want to give yourself more room than, what is it, 655 to 680. You know, this might be a long-term trade. I'm sure now that the hype is everyone's focused now on this trade or on this, then they're pulling out of AMC is what it seems like, and people are starting to put their money in here. But how much is the float? 500 million, half a billion shares is the float. This thing's not going to move very far. It's not going to move very fast. So for me, I'll never trade this stock because it's going to be range bound, which is exactly where we're at right now, between 630 and 750. It's going to take several days because it's coming down, hit the top, hit resistance, 1, 2, 2 days, comes back down, and it might take another day or two before it comes back up. It's going to move a dollar. That's not a big range for me. It's not going to make a lot of money. So I'll just leave it at that. Let's go to the next one. Blue water vaccines. This has been a good stock to trade. It's shorted. I'm sure this thing is shorted to high hell. I'm going to pull up an alternative. I use Moomoo for my short information because it's updated daily. BWV. not shorts. So I'm showing a massive, massive amount of short selling going on the 17th. Yep, right in here. Massive amount of short selling. And the next question is, have the shorts covered? For the most part, I'm going to say no. This is setting up to be a nice squeeze. Shorts clear, shorts covered in here, I think, maybe a little bit here. Definitely in here. Where you see these pops, a lot, shorts, this is a short squeeze right here, but there were a lot of shorts in this one. And you may have seen some covering, a squeeze and some covering in here, maybe a little bit in here. These spikes are typically short squeeze. This is why I like the TTM squeeze here. You may have seen some covering in here, where you see these little green areas, but for the most part, major short squeeze. For the most part, I don't think shorts have really covered in this. And so, with that being said, and it's been several days, 1, 2, 3, 4, 5, 6 days. That being said, I think this is due for another run, a short squeeze. Now, let's be realistic here, folks, because you could have had shorts covering in here, as it's coming down. If you're a short seller and you've been doing this a long time and you got a lot of money, and you're short. How many shares are short right now? Man, it's hard to say. But let's draw a little trend line here. I think we're going to see this pop over the next sometime this week. And when I say pop, let's break it down to the 5-minute chart, because this 200 moving average on the 5-minute is very key. I'm starting to see a lot of stocks are trading either down to that line, or they're having a trouble breaking through it. But once they do break through that 200, you'll start to see a squeeze at least a squeeze, and possibly even buyers come in. So that's what I'd be looking for, as a break for that 200 and a push past this previous resistance level. Yeah, man, what a run! What a run! Okay, let's do, what's our next one here? iLag. iLag's a favorite. iLag. A lot of people made a lot of money off this one. 1 hour. 1 hour. Oh, that's right. That's when it first IPO'd. Okay, so just seeing squeezes here. Squeeze, squeeze. Let's see what it shows up on the. There was some good volume of shorts on the 23rd and the 15th. So on the 15th, short squeeze. 23rd, short squeeze. So I think iLag's kind of fizzling out. I can see let's look at the daily real quick here. Yeah, I don't know. The chart's it's kind of hard to say right now. But I would keep an eye on this lower trend. So let's see what this looks like on the 1 hour. I can see a clear support line right here. So this is actually kind of broken through support, the trend line support. So this is going to have to push past. You need it if you're in this trade or you're thinking about getting in, you need to draw this trend line here, this lower support trend line, because it has, gosh, come on. There is a clear lower trend line that this thing is following, and it's broken below that. So it might have trouble, short sellers might be shorting up on this trend line, but by the time it gets to here, it's going to have to make a decision if it's trading in this area. Likewise, if it breaks through that and it can't break through here, it's going to come back down and might find this as support. But as the days go by and this trades in a tighter zone, once it gets in this area in here, it's going to have to make a decision. And so you can play the short squeeze to the upside, but the thing is that I don't see a major short squeeze coming here. I think you're going to hit at the most 390. How much you really getting out of this? It's an 80-cent trade for risk versus reward. So that's ILAG. What else we got? Y'all falling asleep on me already? Disney's in between two small gaps. Disney, man, guys, the whole Jerome Powell changed everything. Let's see how Disney traded. So, big Papa Daddy Jerome scared the markets, and where's she headed? Where is she headed? Here we are at that center line. So it could bounce off that line, come up to support. I don't see it happening tomorrow. I see this coming back down. I bet you'll see it bounce off of this 111. Where are the gaps? They said there was some gaps in here. Yeah. Okay. So we've got 112 to 113. Yeah, it could come down and fill this gap. It could also come down and fill this one too, to the 19, and then bounce off 108. Typical range here is $3 ish on an average day. Could see, I think that was earnings here. Yep, earnings. So I think you'll see this gap be filled tomorrow, and we'll see if 112. Once these gaps are filled, that's another important thing. Gaps can be strong support and resistance levels because once traders know, and I mean to the penny, once traders know that these gaps are filled and there's not another gap below there, and it's close to a support trend support line, they'll buy right off of that bounce right as soon as that gap gets filled, and that's near a support line. They'll buy right off of it, send it right back up, which is a possibility. That would mean it would have to come down a couple of dollars, Disney, on a $1.8 billion float. Yeah, it might come down. It might come down to that level. When you're kind of analyzing a stock, you want to take into consideration, okay, on really bad news, how far did this thing drop? And that's the good thing, and why a lot of blue chip stocks are traded by Wall Street or preferred by Wall Street, because the moves are not as wild. So $1.8 billion float, which is a massive fucking float, it went from 118 to 113. So $5. That's not that much in the grand scheme of things if a stock's trading over $100. So, but now you have an idea on bad news on Federal Reserve market conditions, not bad news on negative earnings. You'll know that the drop is going to be about 5. So which means on more of a sell-off, it might come back down around 2. I have a theory that on technical analysis, I think companies release certain news at very key moments in time, so that they can manage how the price action of the stock and I don't know if that's they could be in cahoots with Wall Street for all I know about releasing information at certain times. But if you're a CEO of a company and you have some control over the news release, would you rather release news right here, when the stock is on a clear run higher, or would you rather release it when it reaches, maybe a previous resistance level, and you know that traders are going to be selling it off anyways? When you know it's going to reach the 200 moving average, yeah, you'd rather release it up here than right in the middle of a good run. So, just my opinion. What else we got here? What other stocks? I've got a list of stocks I want to take a look at here in just a minute. I don't see any other ones, so let's go ahead and take a look at top gainers active. Where are you at? OIG. This had a nice move up. Um, this one we've been talking about. The CEO is basically a liar. Or no, was that somebody? No, somebody else. I think. I can't remember what Johnny was talking about. Is he back from vacation yet? I hope so. Um. Anyways, uh, I'm watching this to see if this 70 level here is going to hold. This seems to be the next kind of support level. I don't know if it will. Bought options contracts pretty far out, so this definitely got some time. And we've got a gap here that's still got to fill. We'll see if it comes back up. Friday, how did it respond to Papa Pal? Yeah, didn't really respond much at all, so that's good. Let's go back and take a look at 1 day top gainers. Micro Focus. What did they do? Reverse split here. What is this? Why is Micro Focus up 94%? Oh, buyout. I bet you 630 per share. That deal. What did I see? Yep, acquisition 630. Okay. So here's something to know about acquisitions. I've traded a few acquisitions where the price was clearly stated on how much the company is going to be acquired. I bought options, and the options went for a month and then expired worthless. The theta, the time decay, burned that premium because the stock just traded in a range until, because the acquisition was never, they announced the acquisition, but it never knew the news of it actually being finalizing and going through didn't hit for a little while later, and so that stock just traded in that range, and it never went past the acquisition number. So it just totally burns up the premium option. So if you want to hold on to a stock that's going through an acquisition, buy the shares, buy it long term. Nerve, we already talked about. That's probably the number one watch coming up. OLB Group. I'm not familiar with this one. Micro Focus. 9.5 million. China Green. So here's a this can kind of be a double-edged sword. Johnny is very adamant about not trading ADRs, basically Asian stocks. You can easily get fucked and burned on these. These are not Asian stocks if you do trade them, and they are very, very risky. There is the stocks are still getting delisted. Baba is even being talked about delisting because the majority of China stocks, and this is pretty much coming from Xi Jinping himself, they report their earnings, but they don't show any data to back it up. They don't show how they are a profitable company, or they only had this many losses. And the SEC has requested from numerous China companies, we need to have proof. Where's the proof? Show us your books. And they refuse to do it. And so SEC said, okay, they've given them more than enough time. So they've started delisting. They've really only delisted some, DD, I think, was one, one of the only major ones, DD Global. Let's see here. I thought they delisted it. Anyways, they have a risk of becoming delisted. They are extremely manipulated. And what was the other one? Um, Gosh, I can't remember the Chinese stock that went to 2000, but there you can make a lot of money in them, no doubt. But you can also lose a lot too. So just be careful in these stocks. There are some China stocks, like there's some China solar plays that are there was like only 4 stocks that were up after the POW news, and one of those was a Chinese solar company. So um, just be careful with that, guys. What's some of the other ones here? Trying to see if there's any that look familiar to me. Looking at any of these top gainers, always look at the float. That's pretty much all that's trading. That's going to be trading quite a bit. It's hard to catch these, at this point here before it shoots up. But when you do hear of news on a stock or it has some kind of catalyst and it spikes up, wait till it comes back down. This initial spike right here, let's take a look at the 5 minute. This is usually where it happens. And within the first 5 minutes of any kind of news breaking, uh, regardless of where it's coming from, the stock will come back down 99.9% of the time. Don't be the guy that gets in here, okay? Because it's going to come back down. Now, luckily, volume came in again and this thing shot up higher. But this thing shoots up when when you think about getting in a stock, the first thing you need to do, look at the float. That'll tell you how fast it's going to go up. More importantly, how fast it can come down. Because you have to keep this one very important thing in mind. Not only are when people buy into a stock that makes the price go up, but just your average sellers who are taking profit and getting out, when they sell, that stock price is going to come down. But you compound the drop down when you add in short selling. You basically double the speed down. A stock can come down twice as fast as it went up, and so you have to keep that in mind. What was some of the other ones? Let's do a 5-day. So wow, Never's really button up there. I have not heard of RVPH. Interesting. Let's take a look at this one real quick. 12 million float. Pharma, biotech stocks. What is the biotech ETF? XLB. Shit, what's the biotech ETF? This is important. You guys need to know this and keep an eye on it because we're about to see a massive rotation happen here. You're going to see the rotation out of growth stocks, out of tech stocks. Meta's going to drop. So let's talk real quick about just kind of the overall market, and if you're in a stock, let's say for example you're in Meta. Let's say you got up in here, pretty high. This stock is going to keep coming down. Now, I've seen a lot of manipulation. Nvidia is the perfect example. Nvidia had horrible fucking earnings. Horrible earnings. Their loss was a lot worse than people anticipated. But yet, I watched the stocks. Where is their earnings here? Let's go on the daily. Earnings. Revenue of 6.7 from 8.9, and that's not even what their loss is. And that fucking stock stayed up there. What day was that? It was on the 24th. So they had earnings here on the 24th. Yeah. it it does rip after earnings is what the notes that I had in here. Puts before and rips after. But it should not have ripped on a massive reported loss. And so that's part buyers coming in and buying the dip, because one day very soon, probably next year, especially once more of these semiconductor chips get going, Nvidia is going to be an extremely valuable company. They are already a valuable company, but they're going to be worth a lot more. But in the short term, at least, look at that trend line. This trend line was drawn a long time ago, guys. A long time ago. And look at it. This is why technical analysis is so important. I drew this line. I think I drew this line here. Maybe even over here. But this just goes to show how you can kind of predict what's going to happen with stocks, because once it broke through that support on a gap down, came back up, filled that gap, but could not break through it. And here we are. 179 and 161. Nasty. Now, Monday again, here we have previous resistance and a gap to fill. So if you're going to trade Nvidia, lost that gap. You can bet that the price action traders are going to be looking for that gap here. And once that gap gets filled, I would expect them to buy it up and this to come back up. Might even push back up to 166 and then probably come back down. At some point, it's going to get, and this applies to all stocks, but at some point, it's going to run into this trend line here. This is a major resistance. So if the price action, as the days go on, and come the 19th, when is that, September or the 21st? You watch. I'll bet you. I'll bet you Nvidia comes up here, touches this line, because the FOMC minutes, when those come out, there's a very high chance that the information, they're going to raise interest rates by at least 75, which is probably the anticipated. And as stocks go, as the markets go higher, the chances of them raising interest rates increases, because the markets go higher on typically conditions getting worse. So if they have to raise interest rates, it's going to slow down the economy. That's kind of where the bad news becomes good news. So I kind of take that back, and that's another unpredictable factor that's kind of fucked up anticipating the markets, is when bad news became good news, meaning that if unemployment numbers came out higher, people getting laid off, well, to the markets, that's good news, because that means that inflation, that's one sign indicator that, oh, maybe inflation's coming back down, or inflation will come back down because people are getting laid off. But then it wasn't long after that before more data came out that in fact, more jobs, there were a lot less people that were laid off on the next report. So, what else is going on here? I think I think that's kind of it, guys. Going back to the Meta, this is clearly in a range. Okay, so if you're in a stock like this and your average is up here, and it gets down to after the Jerome Powell speech, I mean, Meta, in my opinion, is another. It's either highly manipulated or buyers absolutely fucking refuse to let price action drop below the support area. You know, Dark Knight Decay, he talks a lot about these supply and demand zones, and this right here is a perfect. Oh, this right here is a perfect example of a demand zone. People demand, they want this stock, and so they buy it up. Trap supply up here. There's a lot of supply. So when the price action gets to this point, it has to uh, get through all of these sellers, a lot of trapped supply, bag holders, if you will, and in order to push higher. And it hasn't been able to do that. And so now what you have with Jerome Powell, and you see how you see a what do you say, a crossover point between these moving averages and at an important point in history, and it just so happens to be the bottom level of supply. Now, this supply, uh, it's been chewed through before and come back down. It's been chewed through again, so there might be a lot less supply here. So you might not, you might it might come back up here and push right through again the next time, but we're coming down to a demand zone. So if you're looking at trying to anticipate a bounce off of this zone, you want to watch for this first level right here of a double bottom. Is this going to create a double bottom and bounce higher? And what you ideally want to look for is the close of the daily candle. It's easier to see here on the 4-hour, but if it breaks through that level and closes the end of the day, it's likely going to come down some more to a previous support level here. I don't see Meta dropping below this 153. Well, I say that. It, it could after this news, but you'll likely see a bounce. It came down here, bounced up, came back down, dropped all the way down, bounced back up, chopped, traded in a range here, and then pushed back up. Consolidated, traded in a range, pushed back up. Consolidated, traded in a range. Oh fuck. So the Meta, if you studied the pattern, you drew your lines. Look at this. You have weeks of predictable range tradable patterns in here to make money. Sell, buy puts on the way down, triple bottom, buy calls way up, and here's this 200-day holding support, 100-day bouncing off support, continuing higher. Anyways, I think that's all I got, guys. This week, oh, cool. Sweet, Jasmine. If you did that, that's awesome. This week, where Monday's about the only predictable day that I can say with enough confidence that I'm gonna hold on some of my put options. I'm probably gonna add to those, and I will, as the days go on, I will close out my the expirations that expire this week. I will look to close out maybe one tomorrow, maybe one on Tuesday, depending on the price action. I'm going to stagger out my trades on the SPY on any kind of blue chip stocks. and just kind of see where we go, because I fully expect the market makers and Wall Street to buy up some of the dips. As a retail trader, I do not recommend buying dips. These dips are going to get shorted like hell into. If we went back real quick and took a look, right here's a good example. 384, I think when Meta reached its high, you know, it would come down to probably a support level and trade up, and as when short sellers, when that price action got to a support or a resistance level, they would short the shit out of that thing, and sellers would sell to take profits. And that's what's going to happen. We're going to be on a downtrend for a while, at least until September 20th. There's going to be bounces, but I'm buying puts for the long run. When I say long run, I mean when I'm looking mostly at the SPY and maybe some other stocks I'll look at too. But I'm expecting a sell-off back down to the 370s. It's not going to happen overnight. It's not going to happen over a week. It could happen maybe in 2 or 3 weeks going into September 20th, but we're going to bounce off of previous support at least a little bit, maybe a lot in some cases. This is a 400 is a major one, 385, 386 is another one. We might bounce and then continue lower. So we'll see how tomorrow goes and go from there. Good luck, get some rest, guys, and I'll talk to you later.